asset classes, allocation, and protection. Good day, students. I am Stacy Perkins with Legacy Education Alliance, and I'm happy to bring you a brand new edition of Legacy Connection, your connection to Legacy's most shared and engaging content for this month, spanning from real estate and foreclosure investment to financial markets and currencies across the globe. A few months back, in the January edition of Legacy Connection, we discussed the different options available for investing in assets and how each asset class offers a different set of benefits depending on what the investor's particular situation is. Well, today we would like to highlight those benefits as well as examine two major components that can help determine optimal asset allocation once you're ready to adopt those assets into your portfolio. Lastly, we'll be joined by Legacy Education Alliance's CEO, Anthony Humpage, who offers his insight on today's topic and also has some very exciting news to share. Let's get to it. We recently published an article on My Elite Portal titled, "What Asset Classes Should I Invest In?" In it, we outlined some key benefits offered by each of the 5 main asset classes, the first of which are money markets. These are good and safe for short-term investments, where liquidity as an investor is required. Fixed income. Assets in this category are generally safe investments and provide a steady stream of interest earnings. Equity. These investments allow for the opportunity of greater return, but come with an added risk that not everyone can afford to bear. Commodities. Goods in this category are often used to hedge the volatility caused by other assets, like equity. Real estate. A stable asset class that can also be used to reduce the volatility of the overall portfolio. Okay, so now that we've covered the benefits of each asset class, how should you allocate them for optimal performance? The first consideration you'll want to make is the liquidity of your personal capital. Everyone has some level of predetermined income that they will earn over the course of their life. If most of your capital is tied up or already liquidated, then you will want to focus more on liquid assets that provide some cash flow for you. If you are in the middle-aged years and are currently being paid a salary, then you may not be as concerned with the liquidity of assets. The second thing to consider when determining optimal asset allocation is your level of risk aversion. Typically, fixed income investments are relatively safer than equity. Therefore, the less risk-averse you are, the more you may want to lean toward equity since bearing more risk generally leads to larger returns. Of course, this doesn't apply to deals that do not provide a competitive risk-adjusted return. In other words, a huge risk for mediocre payoff. On the other hand, if you are more risk-averse, then you may want to lean toward a portfolio with more fixed income investments. Ultimately, you should use these considerations as guidelines for determining how to allocate your personal investment portfolio among the different asset classes. Okay, we've briefly discussed asset classes and asset allocation, but what about asset protection? Surely there must be strategies that you can put in place to help protect you and your assets. Let's turn to Legacy Education Alliance's CEO, Anthony Humpage, for more insight on this essential concept, as well as some exciting news he would like to share with you all. Anthony.
Hello, thanks Stacy. This is Anthony Humpage. Let's talk a little bit about the asset protection part of our Assets Cubed platform. You've already had some discussion of classes and allocation. Now let's think about protection. Look, asset protection. There are a lot of people, organizations, and not just criminals that would like to get some or all of your wealth away from you. And what's really important about asset protection is to have it in place before you need it. If you try to play catch up when you've already got an issue that you're trying to deal with, oftentimes the law will frustrate your efforts. So this is something you need to do today. Now, in very broad brush measure, what sort of things are we talking about? A lot of times when we talk about asset protection, people automatically think about using corporations and entities or even trusts. But before we even get that far, we need to talk about what you can protect. You can't protect assets that you already owe to somebody else. So essentially, we can protect your net worth, your assets, minus what the law calls your claims, what you owe to other people. Then let's also not forget the intermediate step of insurance. It's largely overlooked, but it's very important. Particularly a type of insurance that, while it may sound a little confusing, will be issued as part of your auto policy, typically, if you're in the United States. But it's called an umbrella policy. They're not expensive. These are general liability policies that only kick in once your other insurances are paid out. In terms of what we might call injury or tort liability, these umbrella policies can be very valuable. So that's just a very broad discussion on what we're going to talk about in the main Assets Cubed book itself. But I do want you to think about doing it now, deciding what you want to protect and what the most appropriate vehicles of protection there are for you, insurance entities, trusts, or other things that you can do. Now, I'd like to take this opportunity to announce that I've written a book. The book is called Assets Cubed. Here is some more information on that. I wanted to give you a quick general overview of the book. First thing I always like to tell people is Assets Cubed is a framework. It's not a precise equation to tell you what to do in the areas that we cover, which are asset classes, asset allocation, and asset protection. Asset classes: cash and currencies, precious metals, property and real estate, negotiable instruments, stocks, bonds, other financial instruments. Allocation: how much of each should you have? That will be different for every one of you. Okay? And how do we protect our assets? There are many ways we can do this. Apart from entities and insurance, the sort of thing we all think about, where our assets are can add to our asset protection. The availability of living in a global world and being able to make investments overseas is just one example. The book is different because Assets Cubed has a broad reach. A lot of financially oriented books are written by a person who specializes in one particular area or another. Stocks, precious metals, real estate. So they focus solely on that. They don't enable you to think in a broad or macro sense of what you want from your assets and how you're going to spread your wealth out amongst them. And, frankly, that is not a static picture. It's going to change throughout your life. If not every week, certainly every year. So, we call Assets Cubed a framework, and that's exactly what it is. It's your palette to let you paint your own picture of your financial future. I think you'll find it a worthwhile read and I hope you enjoy it. Once again, this is Anthony Humpage. Thank you very much for listening.
Thank you, Anthony. We look forward to the release of Assets Cubed as well as the wealth of knowledge it will bring to all who strive for financial independence. Well, that covers it for this edition of Legacy Connection. I'm Stacy Perkins with Legacy Education Alliance. Thanks for watching, and we'll see you next time.